Hi, this is Mark with ValueCharts.com. I wanted to follow up yesterday's trading example with how you would manage that type of signal. Yesterday we talked about a very nice bullish divergence forming on a 120-minute cotton chart. You can see again here we have a lower low here, right here, at 87.96. We broke through the previous low of 88.17. So we have a lower low in prices, and we have a higher indicator value down here in the histogram. So this forms what we call a bullish divergence, and I created the video really during this following price bar right here. Assuming you actually went in to buy on this price bar, how would you manage this trade? Well, I was thinking more from a swing trader standpoint. So what I would be looking to do is, as soon as prices reach moderately overvalued on the 120-minute chart, I'm looking to move my stop to break even. So the natural choice for a sell stop if you initiated a long would be below the below the low of 87.96 level right here, and you can do it either one tick below that or several ticks below that depending on your style of trading. As soon as I hit the value target of moderately overvalued, then I would be looking to potentially move my sell stop up to break even. Okay, now we can see in this case I would have been out hopefully at break even. Sell stops are obviously not guaranteed to get you out at a particular price level, but in general they tend to be fairly effective in most liquid markets. So that's how I would have handled this trade. If you wanted to keep this or treat this as a short-term entry, then you could have liquidated part or all of your position once prices rallied up into moderately overvalued. And you can see they did that right around the 88.62 level, and depending on where you bought it, between call it the 88.17 to 88.50 level. It really depends on what price level you entered there on that price bar would have dictated your profits. So either not very much in terms of profits or potentially quite a bit. So this is a trade that did not get the lift that we initially wanted, but this is certainly not a bad signal still. So we've traded down, we've broken the old lows, and now we're in watching mode here. So I would say longer term, looking at a weekly chart, what I might say could be a possibility is we've got one of two things happening in my mind. I still believe the bull market is certainly intact here. We just have a normal correction. We could come down to the support level right around, call it the 86 level, 85.77, 86 level. We have a lot of highs that registered highs right around, a lot of price bars that registered highs right around that 85.77 to 86 level. So it's certainly possible to get a weekly bar next week, possibly to come down and retest that. The other option would be if we get a daily correction today to rally out of undervalued price levels back into fair value. That could also potentially define a low as well. Maybe get us back to a doji formation, creating a yellow-tipped doji. So those are the things I'm watching for. Certainly I'm still bullish in cotton until the market proves otherwise. I think this is a market that could still be in bull market mode here. So we'll continue to watch this. This is real life trading with what we're looking at here, and we'll continue to look for opportunities like this to find strategic entry points and stop management practices. Have a great weekend. Thanks for watching.